Welcome back, dear learners. Before the ad break, we dealt with prepaid expenses, when you have paid an expense for the next financial year. With me here now, I have income received in advance. Let us define it. Income received in advance. This is when payments are received for goods or services that have not yet been provided. In other words, we are rendering a service and some of the customers have already paid us, yet we have not yet rendered the service to them. And maybe the service will be rendered in the next financial year. Therefore, we consider that income received in advance. Or customers buy goods from us and we only deliver the goods to them in the next financial year. That is considered income received in advance. Only income receivable for this financial period must be reflected in the financial statements. That simply means income received in advance must be adjusted. Amounts received for the next year cannot be reflected in this year's financial statements. Let us look at this question. And it says, rent income, 182,000. We have an adjustment, which reads, rent income for March of the next financial year has already been received. Remember, if a financial year is ending in February, it ends in February. It simply means it would have begun in March the previous year. It would have begun in March the previous year. This will give us the 12 months for a financial period. Here we're being told that rent income for March of the next financial year. So here we have March here now, which is the next financial year. The rent income for this March has already been received. So we then have income received in advance. How do we get that amount? We should be able to say the rent income, which is 182,000, here it's 182,000. We divide 182,000 by 13 months because it is 12 plus that March, 1 month, so it gives us 13. So we say 182,000 divide by 13, it will give us 14,000. We have received 14,000 in advance. How do we record it? In the general journal. In the general journal, we'll come and then we debit rent income 14,000 and we'll credit income received in advance 14,000. That is the same 14,000 that we had calculated. In the general ledger, we then come and we say the total is 182,000. This is the total income that we have received. But remember, this is for 13 months. And we need to remain with only 12 months. So we need to take out the 1 month that we've received in advance. So remember, this is an income account which increases on the credit side, but it will decrease on the debit side. So we'll come then we say income received in advance 14,000. We are decreasing our rent income account. We are then left with profit and loss 168,000. To complete double entry, I'll then come to my profit and loss, then I say 168,000 on the credit side because this is rent income. And then remember, we had income received in advance, which was credited 1,400 here. Therefore, I'll come to my income received in advance, then I credited 14,000. This is how you do in the general ledger. Let us therefore see how it affects the accounting equation. In the accounting equation, we are now saying, remember in the general journal, we debited rent income of 14,000. So we come here, we debit rent income. And once you debit income, because income is a credit balance, the moment you debit income, you are decreasing the income. Therefore, it means you come to the owner's equity, you are decreasing owner's equity, then you say minus 14,000. And then you credit your income received in advance. So I come here, I am crediting income received in advance. When you receive income in advance, that means you have received a customer's money, yet you have not offered the service or delivered the goods. In that case, we as a business owe our customer, therefore we consider it a liability. That is why you find we come to our liabilities and our liabilities have increased, plus 14,000. It is important, dear learners, that you remember that as long as assets are not affected, we need to show a zero. That is no effect. I'll repeat it again. When we have received income in advance, we will debit our rent income. Therefore, we'll come to owner's equity, because once we debit rent income, we are decreasing our income. So we come to owner's equity, it's a minus 14,000. And we credit income received in advance. Therefore, we come to our liabilities, it's a plus 14,000. Assets, no effect. Dear learners, thank you so much for joining me in today's class, and I hope to see you again soon. It is goodbye.